Hello, and thank you for joining us at xm.com for this preview video. The Swiss National Bank meets on Thursday, and although inflation is marginally over the 2% target, the bank is expected to deliver another hike this week. I'm Christina Marujas. With me today is our senior investment analyst, Marios Hadjikyriacos. Marios, given that the Swiss National Bank only meets 4 times a year, there is some speculation that it might even deliver a 50 basis points hike. But given that inflation has dropped significantly, do you think that's a realistic scenario right now?
Hello, Christina. It's going to be a very interesting meeting because it's one of those meetings that the economists disagree with the markets about what's likely to happen. So let me unpack that. The markets are split on whether the Swiss National Bank is going to raise interest rates by 25 basis points or 50 basis points. Now, the economists are leaning towards 25, but the markets are leaning towards 50. And the reason that there is such a debate going on is, well, the Swiss economy has been flashing some pretty encouraging signals lately. Economic growth was surprisingly strong in the first quarter. The unemployment rate is near 2-decade lows, and inflation was at 2.2% in May. In fact, core inflation was below 2%. It fell to 1.9%. So it seems like, mission accomplished, right? Well, not really. The latest comments from the Swiss National Bank suggest that that's not enough for them. Speaking only last week, we heard from the chairman, Thomas Jordan. He stressed the need for more rate increases to tackle what he described as stubborn inflation. Now, the issues, the concern for the Swiss National Bank is that inflation could heat up again later this year. They are worried about the rents firing up to play catch up, essentially, with house prices. And another risk has to do with inflation expectations. They are concerned that the longer inflation remains above 2%, the more likely it becomes that this inflationary mindset becomes entrenched and influences consumer and business decisions. So they are probably going to raise interest rates one more time. The question is, will it be 25 basis points or 50? Now, I'm in the camp that is looking for a smaller rate increase of 25 basis points. And the basic reason behind that is, yes, the economy was pretty good in recent months, but we are starting to see some signs that economic momentum has started to slow. The manufacturing sector is in contraction, and the recent scandal episode with Credit Suisse, it didn't really help with psychology and sentiment. Now, considering also that core inflation is already below 2%, I don't really see a compelling argument for the Swiss National Bank to raise interest rates by 50 basis points. I think it would be a step too far. It would risk inflicting unnecessary damage on the economy. So I think they're going to play it a little bit cautious perhaps this week, and they might only raise interest rates by 25 basis points.
I see. Now, let's look at the market reaction, Marios. How could the franc perform this week, and what is the broader outlook for the currency?
Yeah, so if they disappoint the market and they only raise interest rates by a quarter of a percentage point, 25 basis points, that's probably bad news for the Swiss franc. The most likely, the initial reaction in the franc is likely to be lower if that is the case. Now, looking beyond this meeting, even if we see a negative reaction this week, I think that the overall outlook for the franc is actually quite bright. And the reason is the Swiss National Bank has not raised interest rates as much as other central banks have, but at least they've exited negative interest rates. So that's one factor that is helping the franc. More importantly, though, I think the Swiss National Bank has flipped from a net seller of the franc to a net buyer. So for many years, the Swiss National Bank used to intervene in the FX market to weaken the franc. They used to sell francs on the open market to weaken the currency. But over the last year, that this relationship has flipped around. Now, the Swiss National Bank is buying francs on the open market and selling foreign currencies, and their goal is to keep the currency stronger. And with that, they hope to keep imported inflation under control. So you have the Swiss National Bank being a positive force for the franc in the FX market, and we also have global risk sentiment to consider. The franc is a safe haven currency. If we see the recent euphoria in stock markets calm down a little bit, and if concerns about a global economic slowdown resurface later this year, that would be another beneficial force, I think, for the Swiss franc.
Marios, thanks so much. This was a preview video. Thanks for watching at xm.com.